Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
Let's take a quick look at the Forex calendar. Today is Tuesday, June 15th. Half of the month is now over. The summer has officially started for the vast majority of the financial sector, at least the US-based group, because a lot of rules were lifted. All the rules locking us all down with the rather draconian measures in California were lifted as of today, the 15th. So there's a lot of people getting out, wanting to travel. School's essentially officially out, at least it is here. So I would expect the summertime volumes to drop. That's something you want to be cognizant of, because typically when summer volumes are light in almost any instrument that you can trade, if the volumes are lighter, the volatility can be higher, right? This certainly can be the case as well as the Forex and the futures markets, as thinner trading or thinner volumes, so to speak, can lead to some treachery and a lot of what they call skipped prints or zippers running through particular areas that have no volume. So the market maker systems are designed most around the world globally to look for the next best trade in a particular sequence, right? So if you're trading, as an example, here's the DXY 90.56 right now. On this, if you're trading at that, and let's say there's no bids or offers for 10 cents around that number, the system's going to rip up or rip down to that level to fill that trade. Now, in the Forex markets, you've got a lot of participants globally. You've got a lot of big liquidity providers, including the big banks, which is 14 of some of the largest institutions and liquidity providers globally out there. So it's not like the volume, which you can't really see on my charts, but it's not like the volume is dropped off, super precipitously, but it is slowing down. So that typically means that, not necessarily a risk of crazy high vol moves, but there is certainly the opportunity for things to trend sideways more, right? Now, there's always outliers in that data. Like last summer, we were in the middle of a pandemic, and it was essentially spreading around the globe like the plague. We had higher volumes, right? So it's almost like the summer was just like a regular trading season. But typically here in the US, especially the vast majority of the financial sector is based on the East Coast. And that's where a chunk of volumes comes from in terms of institutions. The summer's a slower period of time, maybe more so this summer. Who knows? I could be completely dead wrong in this assumption, right? And volatility can pick up. I just, my role looking at this from a macro perspective is just to talk about, trends, what's changing, how you can adapt this to accepting trades or what have you, and so forth. So a couple of questions that I got on Saturday. We started later on Saturday because Auvoria had their huge call. We've made some adjustments to the product lineup, and we're going to be offering obviously an arrow-based options and a currency room as a trade room. And we're looking for additional trade room ideas for different hosts or group of hosts to run those rooms. So one of the suggestions I actually made before we get into the analysis, just kind of touching a bit on product, is a stock-based and/or ETF or options-based room. And the reason I have it isn't quite as sexy of an area of the marketplace, but it is an area where there is considerably more players globally. It's also an area that has less risk, right? And it does have the same kind of potential to make money, just like these other areas. So especially if you're buying breakouts in properly forming chart patterns of whatever company, right? It doesn't necessarily have to be limited to just the US based companies. We could play around in many of the companies that comprise the DAX index or some of the other indexes like the FTSE or other types of developed market exchanges from either an equity or an options perspective. So, albeit, I think that there are a lot of rooms run around the globe, whether it be in Discord or some other type of thin media, and how these rooms are facilitated in whatever platform. But the problem I find with most of these rooms, and I've been asked to come in over the last decade that I've sort of been in this space publicly and either comment or be a guest host in the room each day. And I just find that a lot of people in these rooms are they're like, it's like herding cats, right? The vast majority of them will come in and just ask questions, and you can tell right away that they really didn't do any math, right? They didn't go through any of the AP Live Academy, and and you'll just tell them to do that, and they'll just continue to be a thorn in your side, if you will, as a moderator or an admin in the room. And you're spending a lot of your time trying to educate these people when they really should be doing their back homework. So I say that because it's pervasive in a lot of these rooms, and I don't want you guys to be those people, okay? So think about that when you ask a question. It's not like, hey, Steve doesn't want us to ask any questions. It's just, do your basic back, of education on all these areas before you get into these rooms asking basic questions like, what's an option or what's an equity? It's all stuff you really should know before you get inside these rooms, in my opinion. Because in the end, all of this advice, it will help you build a trade plan, and with the guidance of what will more than likely be some really good moderators in these trade rooms. Hopefully a whole bunch of profit, which is really the reason we're all sitting here, right? So with that being said, let's take a look at a couple of currencies. Here's the DXY daily chart. Check weeklies, make sure nothing's changed. It hasn't really. So tight range in the weekly, daily here. I think the real coiling, if you will, this could play out over the next 2 months. I mean, we could stay in a very tight pattern here for the next 2 months. I mean, I've seen this happen at least 70% of the time over the last 15 years I've been paying attention to the currency markets. So there's just been slow periods of time, and it wouldn't be surprising, right? Because of the fact that it is a slower period of time potentially. This also argues for us building a deeper bench of product, right? Because if one market's more active at a given time, maybe it's the equity market's more volatile, and or some opportunities for breakouts or breakdowns in particular stock charts. Maybe the Forex market's a little quieter, right? So just more opportunity to have a chance at performance in any given market. So it's kind of why I've been sounding the horn fairly loud about that. All right, so Euro USD, same thing, not changed much since Saturday. I expect us to be in this range unless some sort of huge event plays out, which takes me back to the Forex factory calendar here. So just looking at, Governor Bailey spoke. I don't think, let me just take a quick look at the GBP. I really didn't have, we dropped down to a 1 hour chart. Looks like we poked our head back down through this lower level, came right back up inside the fray that we've been in on the daily chart here. So we continue to be in a tight range. It looked like there was anything crazy spoken. GBP CAD, same thing, tight range. I got a request for AUD-JPY. Let's take a look at that. I always start with AUD-USD, just understand, again, tight range we've been inside. Always want to look at the majors first. CAD JPY, let's take a look at that. real tight range. I think this thing's just coiling to lift higher. You know, no surprise. Look where we've been. If you're new to these discussions, we broke a big trend line down, and we've just been stepping up, basing, trading sideways, and then lifting higher with not any significant pullbacks, as the Canadian's been considerably stronger against the vast majority, if not all, over the long term, with the weakness of the yen being one of the more prolific. Let's take a look also at the AUD-JPY. Again, looks like it's just going to break higher. Tight coiling, right? Tighter, tighter, tighter. Who knows? It could trend this way through most of the summer. So let's look at a weekly. I mean, this looks like the next stop, somewhere in this range right here, this whole 89 area. Looks like the next stop to me. When, how long, for what duration, I don't know. Just know that if we decide to get some decisive breaks, which arguably on the weekly, we should actually see a resistance line right here at 85.60-ish, which we're seeing on the lower side. But if we see how this wasn't a break of the resistance, we finished underneath it, so that argued for a little more time spent sideways trading and or building a base, right? And then eventually breaking out above that. This is where I would not be accepting any shorts of this pair as we potentially zipper up into that next zone. Keep that in mind if you're accepting trades with MAV versions. Notice a slight lift off of what's arguably pretty strong support here on this Singapore, this NEO-based currency here. This whole 3,200 area, real strong support. Gold spot for the question I just got. Big lift. Would expect a pullback, no surprise, right? Dollar's been stronger. Remember, it's not almost a perfect inverse correlation, but it has been pretty close that if the dollar's lifting, typically metals are going down. This is a weekly chart of silver. This is the GLD, which is just the, actually, let me just look at the spot weekly first. So for the question I just got, I would be expecting, as we, again, could spend most of the summer months just balancing between these two fairly tight areas, which is approximately 50 bucks an ounce of range that we're bouncing between. But if you look at the daily, I'm not, at least the last 4 days, we now have a squeeze zone that has formed here, essentially putting a cap somewhere around 1900 an ounce on this. And support looking like it's right where we're at. So maybe statistically, your win rates would be higher accepting long bounces off at this point, depending on the software using. Like if you're using Arrow, you know, the bounce arrow go here. I don't know if any are showing up. I haven't peeked in the room today. So tomorrow is the big, a lot of people are anticipating this globally. It's a big FOMC statement. Really looking to see if a small group of the 12 Fed governors, which have dissented and are a little bit concerned of varying degrees of inflation showing their face, it'd be interesting to see what comes out of this statement. I would not be trading around this. So as you guys can see, because I got a couple questions on this. Let me show this other screen. I have screens here. Let me share screen 3. So this is a variable. This is actually, because I seem to get a lot of questions about this, but this is a this is version 2.01 I actually have a developer's copy. I don't know if this looks different than your VPS because this particular one's hosted on an Amazon AWS VPS server. But in any case, I have everything paused, as you can see here. This is the pause button for the question I got. I have a few things that need to be tweaked in here, so it's just loaded up onto this AWS server by Dasan for me. So I gotta go in and do a few things. So I'll be able to be a little more active since I got some more time this summer to get a little deeper and darker into the MT4 trading world here. I'll be able to share more. What I say and what I talk about in no way will ever supersede what is far more important than listening to me talk about Gearbox or Neo or Variable, right? Is making sure you guys are on the developers calls or making sure you at least listen to the recordings, because these guys are far more plugged in, along with our top leaders around the world, than I am. I just don't have the time to be as plugged in. I may be able to change that statement over the next month or so, but once I move to Florida and we're back off the ground with a new registration as far as advisors, I'm going to be on like a road show for probably 4 or 5 months. I'm just not going to have the time to get to the deeper dive in a lot of this stuff, but I'll make sure I review the crypto stuff for you guys as well, which is the next question I got. There's a lot of crypto out there, but let's just look at the Bitcoin US chart for this. This is the daily. You look at the weekly if you want to see kind of the move we've made, the breakdown, the triangle that's formed, which is much easier to see on a daily chart. So we've had these step down moves and so forth. Oh, you are stuck on the VPS screen. Shift over. So this is BTC USD daily chart, tradingview.com. Each of these candles represents a single day. Red up, green, whatever the hell this color is. Looks like freaking teal. Is up day. We broke the triangle, and then the support came in right around this. There's big support right around this whole 31,000 area. So we've touched it twice, which, the bulls out there talking their book, which is usually just a bunch of people that own it a lot higher, and they're freaking out right here, right? So they're trying to tell you that that's it. It's headed higher. More than likely, we'll probably see 20K on this before it's over, especially if we spend much more time underneath this 40 area. Who knows? I could be wrong, and this could rip back up to 64, and then all the naysayers will like to terrorize me on Twitter, which I kind of find funny. Will come back at me with I told you so, Steve. You don't know what you're talking about. Yeah, maybe I don't. But you only read what we see in the tea leaves here, folks. And I see the tea leaves, I see 20K. So I came close of opening up a position at 32-ish, but I didn't get filled. And I would have put maybe quarter size in this position. I would have sized up a little heavier back here, but I still would only have half size on for something like this for just a longer term swing, potentially back up to this area, in which case I'd take at least 3/4 of this trade off, just because I don't trust that we're going to bang above this, especially if some central banks start sounding the horn about issues with coins going higher. You have some global billionaire who will remain unmentioned that owns a space company spouting off a bunch of bullshit about this coin versus that. But that's just, it just brings, there is unresearchable risk in a marketplace like this. I mean, essentially it's fraught with risk because you could wake up in any given day, and the same thing could be said, as I've heard multiple arguments like, well, Steve, you could wake up tomorrow morning and Tim Cook could have cooked the books, so to speak, at Apple, right? Yeah, I guess that's true. But I mean, in all reality, we have a lot more faith in big tech companies just because they are so tremendously scrutinized by the Wall Street research folks. But, you always want to look at a particular situation. I don't care if this is a chart of corn or if this is a chart of whatever. These patterns rarely lie and how they play out over the long term. Now, in all fairness, you've got a lot of shills, which is a fairly new term. And for me to understand, is you have people out there shilling this, which is essentially like they're on a roadshow of bullishness, right? There's people that are making businesses and social media out there on this with Instagram accounts that I was introduced to one lady 2 weeks ago, and she essentially is on a global roadshow with her and her team of cuties, and they're out just pumping this stuff globally, and they're trying to set up a PR company around it. Hey, I hope they're successful, but she asked me her advice, and I told her, I said, well, what's your business plan if these coins, DeFi or whatever, what's your business plan if this whole market just decides to go poof like it did in 2017 and take like 2 years grinding around the drain to come forward? She didn't have an answer for that. And the funny thing is her two business partners looked at her all weird, like, hey, why don't we all think of this? I mean, it's like you're living on a hope and a prayer. If you're going to build a PR firm and your clients are going to be one sector, and that's just global coin or token based, or whether it be DeFi or not, and the whole category just goes pop, what are you going to do? Right. So you want to be a broader. So I told them they should just get into being in the space. And this is just one half-assed example of a whole bunch of stuff I see just building up around coin. And hey, you know what? I hope I'm wrong, and these people all do fantastic. I really do. There's really very rarely periods of time that I truly wish I was wrong, right? But when you have people far smarter than I, like Dr. Michael Burry, if you guys ever want to Google him, he is a real person. They made a movie about him. He's one of the smartest guys on this planet. He's completely retired. And he thinks this whole area is just going to evaporate. I don't know that I agree with that. I don't know as much as he does. I could be, right or wrong. But the important thing is short term, you really want to just understand risk. That's the key. And for God's sakes, don't put all your money in one basket, right? I still see way too many people putting, just 10, 50, 100 grand in something. That's all they have, right? And, if it decides to blow up, as Amazon did once in its life, as, certainly Microsoft and Intel, they've blown up about 80% of their value once in their life. And, and then you hear things like, well, just HODL, hold on for dear life. That's not a strategy. And it's a very poor excuse for being too lazy to do research, or at least have at the very minimum the patience to wait for whatever asset class you want to buy, whether you're flipping houses or whatever, to wait for a big correction and then go out and hunt when there's blood in the streets, right? I mean, these people that bought as Bitcoin is just an example, and I don't mean to be overly tough on Bitcoin, but again, this is just an absolute example of, let me see if I can show this. Looking at a weekly chart. Let's stretch this out a little bit. All right, so here's a bigger chart of the longer term of Bitcoin. You can see this is when I was extremely vocal when we first peaked here. One of the rare times that I was really just out on Twitter saying, sell, 75, 80, 90% of your position, maybe keep a little bit, because I think this thing's just absolutely going to crash, because this was a shooting star pattern, which is really not visible in this weekly chart here. But shooting stars where it just went up and then everybody hit it. It spent, a long period of time running right around 5, 4, which, if you want to look at this from a perspective of an investor, this whole 4,000 to 5,000 range, it's a pretty big range, but I mean, that's about damn near where book value is, because we haven't really wanted to go lower than that over a big, big period of time. So, because I got asked the other day, where would you truly want to be a buyer at? And I said right around 5,000 a coin. They're like, oh, well, we're never going to see that, right? And it's the same thing that all these inexperienced folks were harping on when we were at 20,000 ish. And what did we touch? Just under 20 in 2017. And I said we probably wouldn't see that high for many years to come until we broke out again. And now that there's so much cash in most countries that are higher end on the wealth spectrum and or developed markets like the US, Europe, they're just sloshing around with so much cash right now. It's trying to find a home. And this is the movement just since October of last year. So arguably we've gotten, well, here's March. So we doubled from the bottom. And now we're just way, way up. Still, we're fourfold in returns from that 10,000-ish area launch level, right? So just, again, not related to any currency or anything, just a general discussion in risk management, right? You want to be a buyer while things were terrible. And for those that I've heard from a few of you that, put some good money in there and then it absolutely rocketed on you, I hope you took some off the table at the top, because you just gave back 50% of this on this correction. So here's Ethereum daily, a little bit of a different look to the chart, but ideally I'd want to be an owner that's down around 800. And it wants me to take a look at Coinbase. I think this thing, just in all fairness, you gotta look at a 4-hour chart and to see the disaster this IPO has been. Yes, Coinbase has tremendous revenue growth, but it probably, the only people that really did well were the initial seeders of this that, maybe by some stroke of luck, rolled out with a whole bunch of unrestricted stock, which is typically not the case if you're an insider. You have a period of restriction in most cases where you can't. In some cases you can. I didn't go through the tombstones and the due diligence reports on this IPO, but I would have wanted to have been short right off the bat. You can't, because you can't short stuff the first day, usually first couple days in some cases, till the markets and the market makers get their act together as far as offering product to short or being able to just take shares lent. But I would have wanted to absolutely be short this. But we've started to build a little bit of a base, at least on a 4-hour chart. But notice how we've had, let's take a look at all the metrics here. Notice the volume. So let's just start with yesterday. Look at the volume. It's 25,000 shares. Look at the previous day, it was 174. It's probably because people are just selling the gap up. Previous day 13. Previous day 72. For a large cap company, you guys, now I get it, the share price is higher. This is not a lot of liquidity. And that's why you're seeing price jumping around in different, as opposed to what every day should look like in a large cap stock that's come public at what is arguably a ridiculous valuation. Now, there's been a lot of charts of, not necessarily crypto, but there's been a lot of charts of company coming public that their charts have looked like this, like Snap as an example. And I don't use Snapchat, my kids don't, but looking at this chart, a lot of times there's been a lot of sideways movement and then a growth. But the problem I have with this whole story is that even though there was explosive growth, the stock came public too high, the valuation was too high, and now it's going to have to go through multiple quarters, in my opinion, just to absorb that high valuation it hit the marketplace with. So the unrestricted stock phones are the ones that had the huge scores off of something like this. Whereas the average bag holding that didn't do their research on this, they're off 30% of their money, right? It's not risk management, in my opinion. I usually want to let these IPOs settle out, especially if they come to the marketplace with an exceptionally rich premium in the price of the stock. That's my opinion on that. All right, so that's pretty much it. I don't have anything else to address. I didn't go through all the currencies, but there's not much going on in any of them. So I'll save you guys the trouble of listening to me drone on. But I wish everybody a great week. Be safe. Take care. Put together a trade plan. It can be a one-page plan if you want. It could be as complex as 20 pages, depending upon it. But if you put it together, read it every day and make sure you follow the plan. And I promise you, that will be a great framework, right, for building a financial future. And as we always say at Auvoria, essentially to your legacy. May the trades be with you.